The date is Wednesday, May 28th. This will be a Watchhimtrade.com webinar in which I answer questions, in this case a question, submitted by subscribers. So the one and only question I received is this. I'm getting a feel for when to make an entry on my calls as well as how to read the level 2, but I'm still a little uncertain when it comes to making entries and reading level 2 on the put side. Could you briefly explain the key characteristics of what to watch for when reading level 2 for calls and puts? Can you also summarize how one makes an entry on the put side? So this whole answer that I've prepared for you uses all video examples of 3 different put trades I made, and I think it'll do a good job of helping you understand what I'm watching for. But before I get to those examples, I want to respond to this question with a question back to you. And that has to do with calls, because you mentioned in your question that you are getting a feel for when to make an entry on calls. So you must be trading them somewhat well, or at least if you're not trading them well, results-wise, you're probably feeling good about the trades you're making. You probably don't feel like you're doing anything stupid or anything like that. And that's, 80% of the battle, at least. So my question to you is, what are you looking for on the level 2 when it comes to making entries on the call side that is allowing you to get a feel for that type of trade? I would think about the answer to that question. What are you looking for in level 2 on the call side? Because the answer to that question can help you understand what to look for on the put side, because you want to take the answer to that question and turn it around in its opposite form. Everything you look for on level 2 when it comes to taking an entry on puts will be the opposite of what you are looking for when entering calls. Everything you look for on level 2 when it comes to taking an entry on puts will be the opposite of what you are looking for when entering calls. Now the first step with a put trade before we even get to level 2 is first deciding that that is the trade you want to make. And this stems from a simple belief. You think the chances the stock goes lower is greater than the chances of it going higher. This usually comes from something you've identified relative to the price. Maybe it's something you saw in the chart. Maybe it's something fundamental when you examined a company's financial statements or analyzed or assessed a recent news event. Or maybe it's market related, something that's going on in a particular sector or industry, or just in the broader indices in general. Whatever reasoning you might have for why you think the stock is going lower, the bottom line is you want to buy puts because you believe the stock is going lower. So there's 3 characteristics I watch for on level 2 when deciding to enter puts, and then once in the actual trade itself. The first characteristic, number 1, and then there's a 1A to this, but number 1 is, how does the price react at a level where I expect there to be a subsequent move? Maybe a round level, maybe a Fibonacci level, maybe it's a fundamental level that once the PE reaches a multiple of 20 or a multiple of 50, whatever. How does the price react at that level? Then kind of 1A along with that is that price level that the reaction occurs at near a reference point I can use for a stop loss if I am wrong about my belief the stock will go lower? So in other words, how far away is my risk? I define risk as the chance you will lose money, and how much money you will lose with that chance. So how far away is your stop loss relative to that price level? The second characteristic, more directly related to level 2, is are the bids getting wiped out and falling lower when they try and move higher? And is that happening quickly or slowly if it's happening at all? And then number 3 is on the ask side. Are the asks stacking and then dropping when the price falls? And is that happening quickly or slowly when it is occurring? So those are the 3 characteristics. Number 1, how does the price react around a level that I've identified as being significant? Maybe it's a round level, maybe it's just a psychological level, maybe it's something I picked out on the chart. Again, might be fundamental, whatever. How does it react? Does it fall through it, rip above it? Is there no real reaction? Number 2, what is the bid activity like? And then number 3, what is the ask activity like? So I'm going to show 3 separate trades here, all from the last couple weeks, all from different trading days, one with Amazon and one with Netflix. And we'll just go over some of the things that I was noticing at the time and some of the thoughts I was having while in the trade. So the first example is going to be with Amazon, and this was a trade I made just today on May 28th. So you can see here on this kind of blurred out 3-minute chart, but it should be clear enough, the stock fell below 310, made a subsequent move lower right at the open, and then from 935 to 940 it was bouncing back up near 310. I had felt that after Amazon made that initial move lower and was then bouncing in the 309s, I felt if it failed to regain 310, then that would result in a subsequent move lower. So in this trade, the 310 area is kind of my stop loss reference point. It's the price level that I'm watching to see how does the price react at. So as the stock approaches 310, I have a good opportunity to take an entry near my stop loss, which will result in minimal losses if I am wrong about the trade. So I'll click play here, and we'll let this play out for a couple minutes, and I'll provide commentary as it's happening. So you can see right now it's above 309, and I am going to take an entry on the 310 puts. I'm getting ready. You can see my limit order here is about to get placed. All right, so I'm thinking in my head, all right, so I know 310 is my reference point area. I believe it's going lower because of this initial move that it made lower. So now, the closer it gets to 310, the lower my risk becomes, because if it spikes above 310, you know, I no longer believe it's going lower. But if it stays below 310, I do believe I'll have a profitable trade. So I'm watching the bid action here, and you notice it comes above 310 right here, and I took a position. You can see I'm now in at $3.30 on that put. And I paused the video here for just a second. So right now you've got some bidders in the 309s. And what you're going to see is Amazon's going to test 310, okay? But what's going to happen is the bids are going to get wiped out in their attempt at 310, and they're never really going to get any stability above 310. And even though they're able to keep kind of fighting back towards 310, my resistance is getting respected by the fact you aren't getting bid support above 310. So you'll see that play out right now. So here's a 310 test, right? On the ask side, you've got some bidders, 309.89s, okay? So at this point, I just don't want to see any bid extension above 310. 310 is my stop loss area, so it shouldn't be able to move above 310. So that's the characteristic I'm watching for on the bid side. Then, again, I paused it right here. What you're going to see also, what you need to notice, is what's going on the ask side of things. You have these asks that, are right around 310 now. But what's going to happen is they're going to come back below 310 and get pressure back on 309. There's one other thing that's in the works here, and that is the pace of the level 2 is very slow. If you just watch the speed, you should notice that, yeah, the bids aren't getting above the price of 310, and the asks are doing a good job staying below them, but the pace is quite slow. So let's observe here, testing 310. You can see the asks came back below 310, started stacking beneath 310 again, so that's good. The bids are getting wiped back out. We're back down near 309. However, still a pretty slow pace, and you'll see that slow pace represented by the fact that when you get down to 309, Amazon is about to battle back up to 310 for another test. And while 310 doesn't get negated as far as resistance, it doesn't get overtaken, the fact that you were able to get down to 309 right here, but then come back up to 310, says that, hey, there's not really good flush action going on in Amazon. And the way I apply that is I don't have an aggressive profit target as a result. I'm not looking for Amazon to flush towards 300 in this scenario. Now, it's down 0.5%, but based on this level 2 action, as it makes this retest of 310 here, I'll be happy if I can just squeeze 15 to 20% because the action's just pretty slow. That doesn't mean the trade isn't going to work. You can see right now it tests 310 again, but let's see, are the bids able to get above 310? Or do they get whacked back out, and do the asks come back below 309.50? And start getting pressure again on 309. So you can see the bids getting whacked out again, still struggling to really advance on that 310 bid. Just going to fast forward a couple minutes here because it just kind of bobbed and weaved around here. But the key takeaway is that, number one, the asks stayed below 310 and the bids were unable to get above 310. But, number two, the pace was very slow, so I had conservative targets for my profits as opposed to a faster pace, which we'll see in maybe the next example, I think. You maybe could have been more aggressive. So more evidence of kind of a slow pace. Look at another 309 test, but the asks aren't flushing below 309. Granted, the bids aren't popping above 309 and pushing it higher, but this is just another sign that, hey, you want to be conservative in the way you're taking profits because there's just not great downside pressure here. It's more kind of a channel downside type of move as opposed to that fast-paced directional move. But the trade has still worked, and you'll see in just a minute I am able to exit the position at a limit price of $3.75 once the stock makes a little mini push below 309. And notice on this chart, that rejection around 310, that's what you see on the chart, but we were just using level 2 to see it. So again, still testing 309, so that's good, but how come it's testing 309 without getting great pressure? Now it has another chance to really flush below 309. You've got some ask stacking here at 88, gets down to 82s, but how come we're not pressuring 308, 307s right now? It just doesn't have that great pace. So that's why I'm looking to be a seller there at 375, because this feels possibly like the extent of the move, and I did get my position sold into this little move, and then kind of turned my focus elsewhere to Apple because it had faster tape speed. So that was an example of kind of a slow trade on Amazon that was able to play out for me. Even though it was slow, the characteristics were still there. 310 was my reference point that I was trading against, and then the bids were not getting above 310, and the asks were doing a good job remaining below 310 on a net basis. However, the variable of speed, are the bids getting wiped out and falling lower? Are the asks stacking and dropping lower? And if so, is that happening quickly or slowly? Yes, the asks were down ticking. Yes, the bids were getting wiped out, but it was happening slowly. So that's why I was not aggressive with my target. This next example will be on Netflix from yesterday's trading, which was Tuesday the 27th. And this is right at the open. Netflix had made a really nice move on Friday, you can see, and last week in general it made a huge rally from 350 to 400, and now it's coming in to the day around 401, 402, and my focus is simply on 400. I'm thinking to myself, 400 is a simple level to trade on, with the thinking that if Netflix breaks below 400, it's likely to see a pullback. So I have two options. I can buy puts while above 400 with the belief that it is going to break down below 400, or I can wait for the 400 breakdown, which sacrifices a potentially better entry, to serve as confirmation that it is indeed going to pull back. In either scenario, my stop loss is then going to be Netflix showing an ability to hold 400 and start bouncing into the 401s where it looks like it's successfully defended the 400 level. So I don't yet have a position, but I'm just going to click play and let this play out, because you'll see that it is testing 400, and there's some things we can notice by the bids and the asks here that happen. So right at the open, it's testing 400. So notice that at first Netflix ends up holding 400, and it makes a bounce right here, and it's even able to get some bidders back above 401, and they even try to come up towards 401.50. You'll see that in just a moment. Okay, so we took the asks out. The bidders are starting to climb up. 450 stack, 490s. They're going to come up on 401s right here. So now, though, notice that when they do get up here, they start getting whacked out and get back to 401. You have some extension going on, 401.20s, 401.50s, but you'll see that they do get whacked out and start getting pressure back on 401. So because 401 bids keep getting whacked, to me it's a sign that there isn't enough demand right here to keep Netflix above 400. And you can see we're back below 400. And the ask pressure, look how fast that ask action was. Let me rewind it for just a second. So here you are. You've got 401 bids right here, right? The asks are up 401.30s or so. Now, what you need to notice is when the bids get whacked out at 401, watch how quickly the asks extend below 401 and put the pressure right back on 400 again. Okay, testing 401 bids again. You're seeing the same thing twice, remember, because I rewind it just a second. So you got that 401.50 bid whacked out right away. 401 lineup, but the asks stacked. They came back down. 401.12s, okay, now they're back up 401.60s, but look how aggressively they're down ticking. All right, we lost 400, now we're straight into the 450s on the ask. Each time the ask tries to get taken out, it keeps coming back down, and boom, now we're below 400 on the ask side. So after I see this price action, I'm thinking to myself, all right, it did break down at 400. So it looks like it's going to trend lower overall based on what I've seen, only 1.5 minutes into the day. So I'm going to look to play it by buying puts, and I'll take an entry on the 392.50 strike puts at $3.50. Now, I don't get the greatest entry, actually, because remember, we said if I wait for it to break 400, I'm sacrificing my entry point, and that's exactly what I ended up doing. But what you're going to see after I take the position, after what I felt were solid signs that there is weakness and there is going to be a pullback below 400, Netflix is going to bounce up to 401. What I want you to notice, though, is that it is never able to get the same type of bid pressure above 401 that we just witnessed. And after it takes out the bids, it again comes right back down to 400. So we'll see that play out right here. So, I'm sorry. All right, so I took the position because of the 400 breakdown. So now I'm just trading, like I said at the outset, versus an ability to hold 400 and really push through 401s. As long as you're keeping pressure on 400 on a net basis, I'm believing that you are going to see a pullback. So you can see I'm in the position at 350 on that 392.50 put. Here we are, testing 401s again. All right? You see this, though? Notice the bids. 470s, they're not getting aggressive back above 401, and they're going to try, but they fail. The asks coming back to 401, so the asks aren't really clearing out of the way. There's still good ask commitment, in my opinion. You're still just $1 off of 400. That's just, a couple trades into the bid, and you're back printing 399s again. All right, so here's that 401 bid. Let's see, does he start getting extension? Remember last time you got up to 401.50 on the bid side. So if you start seeing 401.50s again on the bids, then it's like, I probably don't want to see that. But if you're not getting any 401.50s, we know that we're not getting as high as we just were, so that's a lower high. Look how quickly you whacked out those 401 bids. Now you're right back at 400. The asks have a nice stack. Look how deep that ask is, 469, okay? And then when it comes down to 400, which should happen in just a moment, you have a good stack that occurs beneath 400 in the 399.80s, I believe it is. And just everything's coming together. The pace is much faster, too, than that Amazon trade. It should appear much faster to you, and that's represented by higher volume at the open versus the Amazon example. But again, good stack here, again at 45. Look how many market makers are showing up, printing 400s. All right, now we're back into 399s. As soon as you lost 400s, the asks immediately went to 399.85, 84 stacking, and now, again, just, I'm able to draw a deep line to kind of represent all of the orders that are at that price, straight down to 399. So this type of price action, when you think about those characteristics on the bid and the ask, that's exactly what I want to see that is supportive of my short trade. I'm seeing bids get whacked out. I'm seeing ask stacking aggressively to the downside. I lost my reference point area of 400, wasn't able to really get a rally back above it. And best of all, the speed of the level 2 is fast, much different than the Amazon trade. So, and this is hindsight because I did not do this, but I should have been looking to be more aggressive with my profit target. I end up taking small profits at 380 on this trade in just a few moments when we print 399s. And that was a mistake. When I reviewed this video on my own, that was kind of thoughts going through my head is, hey, there was good pace here, good price action for a short trade. This was the type of trade where you can be somewhat aggressive, or at least more aggressive than the previous example, with your profit target. So let's just keep watching here and just keep noticing that the asks never come back above 400. They lose 400 and they get great commitment. Now we printed 388s. The bids are having a hard time, really bouncing hard. We're not getting back above 399.50 or anything. All right, you've got a 399 bid, but you keep whacking out the 399 bids. And the asks are continuing to stay down near 399. Again, it just happened right there. Again, 398.79 bids. Every time you get up near 399 bids, you continue to whack them out. Here's another test. Another test by 399 bids, another time that it whacked them out, and the asks are staying down near 399. So that's very good pressure on level 2. And now we're starting to get a little bit better of a flush. This is right around the time I do exit my position. Which again, kind of shame on me for exiting when I did, because watching this price action, you should be staying in this type of trade. There's more downside to come. You lost 400, 395 is kind of the next round level that would make sense to me. Maybe it's different. All right, so I did exit the position, but maybe this is a good sell if the pace is similar to that Amazon example. Think back to Amazon. The level 2 that we're looking at in this example of Netflix should appear very different in price action compared to the Amazon example. When you were testing 309 in Amazon, you weren't seeing good extension to the downside. The bids, everything was just kind of at a standstill. The bids weren't dropping hard. The asks weren't flushing hard. Much different than this price action than we've seen here. When you lost 400 that second time, you really flushed. You didn't waste any time kind of teetering around 400. You went straight to 399. And then once you got to 399, you didn't give any bounces back up to 400. You stayed down on 399s and end up going down into the 397s, 396s. This move here, the footage doesn't continue, unfortunately, but if you just look at a chart from yesterday, which we'll do right now, you can see that at the open yesterday, where's yesterday? Right here, all right? So this is what you were watching on video just now. This open, this price action. You can see you stayed down near 399, and then the next 5 minutes, you then end up going down into the 396s. So there was a nice quick drop. You went from 401 to 396s within 6 minutes. How many of us wouldn't like to be in puts for a $5 drop that plays out over a period of only 6 minutes? So that's the type of level 2 action that you would associate with a faster type of trade, a trade where you could be more aggressive with your profit targets. Okay, final example here is from May 15th, and it's again dealing with Netflix. Now, what you're going to see here is Netflix was in a downtrend kind of all morning. It's about 10:45 when I make this trade, so over an hour into the day. But you can see this nice clean move on this particular day. Netflix opened around 350, but then came below it and made a solid move lower to 342. And my thought process for this put trade that I'm about to execute that you're going to see is Netflix is right now around 345, 346. Well, if you look around 10 o'clock of that day, after Netflix had first made its move lower, it had some support right around the 345, 346-ish, 347 area. Okay, you can see that's these prices here, and that's this mini congestion right here occurred around 345, 346, 347 or so. So my thought process is that I've seen a downtrend on an intraday basis, and now the stock is bouncing back to an area that provided previous support, but it fell below it. So, rule of thumb in any type of technical analysis, a previous level of support becomes a new level of resistance until proven otherwise. So when I see these 346s, I'm thinking to myself, okay, this represents a good low-risk entry because I can short Netflix on this bounce, and if it starts holding 346s and looking like it's setting up to blast through the 347s, I'll exit my trade. Otherwise, if it stalls out on 346s, which would make perfect sense since it was a previous support level and now might be new resistance, I feel good that I've just shorted an intraday top and I can take profits into a move back down near 345. So the way I play this is with the 340 puts, and you'll see me place a bid in just a second here. So you can see the stock is testing 346s, and I want you to pay attention to what happens on the 346 bids. When it tries to get some 346 bids, it even gets up to 346.50, but that bid gets whacked out immediately, and it just doesn't seem to be showing an ability to extend beyond 346. And again, I want to short 346s, so I place a bid at 181 in just a second that will fill on some 346 prints. All right, so we're testing 346s, so that's what I want to fill into, so I'm trying to fill right here. And already right there, you tested 346s, but the bids got whacked out right away. You have ask pressure back below 346s. So right off the bat, there's some signs that, yeah, you know, maybe 346 is an area it's going to stall out on. All right, so another test on 346. This is the time that it does make an attempt above it, and it gets some bids above it, I believe, right here. At this point, I have my order in. All right, so you've got a 346 bid. You're getting some extension, 346.20s. My position fills right now. So did you see that bid flash up right there? Let's rewind just a second. All right, so let's watch this again. Just watch the bids come above 346, and it's literally for less than a second, you pop above 346, a bid shows up at 346.49, but with the snap of a finger, he gets whacked out right away. There isn't extension, in other words. Or if there is an attempt at extension, it fails. So you'll see it again right here. And again, I want to short here because if it's moving through 346s, I'm going to get in at 181, and I'm just going to take a loss in the 160s or so. You know, I'll take a 10% loss. That's fine. So here it is, 346 bid stack. Here comes that 346.49 bid in just a second. And if you go back and watch this video live in the archive, you'll hear me say at this particular time, I'm bidding 181 on a 340 put to trade versus 346 holds. So I'm already training my mind. You know, I've already predetermined what my trade setup is. And that, of course, anytime you do that, and I had it written down, will make it easier to execute the trade. So here comes that 46.49 bid right there. Then he's gone. He's whacked right away. Now you're at 46.21. What's going on the asks? Are the asks getting up towards 47, or are they able to come back below 46.50 and put pressure back on 46 bids? Let's see. All right, they came back below 46.50. You don't have good commitment by the bids. Yeah, they're still holding 46s, but you know, how come they're not pushing 46.50s? This still feels like a stall out to me. I got a good entry, so you know, I'm just pretty much sitting break even, allowing myself to wait out this action. And I'm going to pause it for just a second. So here we are. We've got a few bidders now at 46 after, you know, kind of a struggle to get above 46.50. But notice the asks have come back down 46.30s. You know, they really haven't gotten up towards 47. They seem to be having a pretty easy time coming back down near 46. And what I want you to notice in the next 30 to 60 seconds when I start the video back up is the bids are going to get whacked out on 46. Count the seconds it takes to then get down to 345. It won't be that long. And the takeaway is that there's really good pressure, good commitment, good extension lower by the asks. All right, so still printing 46s again. As soon as the bids get whacked at 46, just count kind of mentally, hey, how long does it take to get to 45? Still got a bid at 46, but the asks are continuing to put pressure on it. 46 bid, okay, 1, 2, 3, 4, 5, 6, 7. Notice the stack at 46, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20, 21, 22 seconds. It takes Netflix 22 seconds to get back down near 345. Compare that to the Amazon example I showed you. My Amazon trade lasted 7 minutes, okay? It took me 7 minutes to get a $1 drop in the stock. It just took Netflix 22 seconds to get the same $1 drop. All right, so you know that's confirmed to me that there is good pressure here, and you know that's exactly what you want to see. And I take profits into this downside move because to me, what you have is maybe you've put in a bottom and you have this base that you kind of established. So now I want to take profits off of that 46 short as 45 to 44 is being approached because I'm thinking there's going to be some sideways price action. And you see that I put in an order here to sell at 222, and we should get filled in just another second with some ask extension below 45. So I did fill that position, and you can see the asks are starting to stack below 45. They're keeping that pressure on there. So in summary, when it comes to level 2 and put trading, you need to start with number 1, your price point and your reference point setup. On Amazon, my setup was relative to 310. On Netflix yesterday, my setup was relative to 400. On Netflix, in the example I just showed, my setup was relative to 346s. All of those examples are predetermined trade ideas that I have. So then once I have the idea, then I can start watching level 2 or just decide to enter the trade and then analyze level 2 while in the trade. And as long as I'm seeing characteristics in the form of the bid and ask action that are supportive of my trade, I can stick with it. So are there any questions about the examples I showed or further points you want me to talk through relative to buying puts? Lastly, what I'll say on this topic is, that's a good question, I'll touch on that. But lastly, what I'll say on this topic is you might very well just be more comfortable being a short seller or being a long buyer, okay? I know many traders that only trade one side. They only trade a long market. And if they can't find a long setup and they think prices are dropping, they don't sell short because they're just not comfortable doing it. They just sit out until they see a long opportunity. I know short traders that they don't ever go long. They just only look for plays that are short. I try and do both because I think that's the best way to, be able to sustain success in the market. But there's people that have success only doing one or the other. And if you do both, you might still find that you are better maybe at being a short seller or a long seller. One of the things I like about TradeStation, and if your broker doesn't do this, I would talk to them about asking them to it. These are my gains and losses on the week so far. And what they do is they show you not only your gains and losses on all trades, but they show gains and losses on long trades and gains and losses on short trades and just kind of the total number of trades. All right, so it just kind of makes things easy to kind of see, hey, do I have a strength at one or the other better? Now, I just started, selling premiums, so I don't have enough data to really track it yet, but I'm just saying. Now, Gunn asks a question, is there anything to keep in mind when you have wide spreads, for instance, on a stock like Priceline? Yes, there's a couple things to keep in mind. The first thing is, except in extremely rare cases, never, ever hit the ask. Never even come close to hitting the ask. Usually there is a 20% spread on a stock like Priceline. You're lucky if the spread on the option is 10 to 15%. What I typically do when trying to take an entry like that is I will go, if the spread is 20%, I'll put a bid in at the 14 to 12% mark. The other thing to keep in mind, and that I acknowledge, is I have a stated stop loss goal of 10 to 15%. When I trade Priceline, I accept that because of the spread, my loss is going to likely be bigger than 10 to 15% if I am taking a loss. It's just, I got to be the baddest fucking trader in the world to trade Priceline and take a loss and never have it be more than 15%. I mean, I respect the hell out of anybody that can manage that. So that's just something I accept. With Priceline, it's, I'm more flexible with my loss, meaning that if it's 20 to 25% instead of 10 to 15%, then I don't beat myself up because I say that's just the nature of Priceline stock. And just like my loss is probably going to be bigger, the spread is going to work for me, and my gain, as opposed to maybe being 20 to 30% on average, with Priceline when it's moving in my favor, is probably going to be 30, 40, 50% on average. So that's something to keep in mind also. And then third, and you'd like to think this for every stock, but it's the most important for a stock with a super wide spread. Your entry point is so critically important. There is not a lot of room for error on Priceline. Some stocks you can chase and you can get away with it, and yeah, maybe you have a 10% loss for a minute or two because you chased an entry and then it goes back in your favor, okay? But then it comes back in your direction. Priceline, if you chase and you are wrong, good luck getting out with less than a 30 to 35% loss. I'll go through some things maybe for next week's webinar because I've traded Priceline a lot. So what I'll do is kind of look back at some of my own trades, because just off the top of my head, it's tough to really say, yeah, this is what you should do without being able to point to some video examples like I just showed you. But that is a topic that we'll discuss on further next week, or certainly within the next 2 weeks. Anything else? All right, don't see any more questions. Thank you for attending. I really appreciate it. This was recorded. It will be posted to my YouTube channel, youtube.com/watchhimtrade, and also posted an email to subscribers of the site. Take care. Thanks.